Hi, everyone, and welcome to this evening's session where I would just like to spend some time looking at what has been going on with the markets today, particularly as we've had Jay Powell up testifying and laying out what the Fed's intentions are with regard to interest rate hikes. But before we start, can I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. Now, what I've done for this session, usually, as you know, those of you who come along regularly will know that we tend to look at the indices, which are the futures for the various equity indexes. But on this occasion, what I've actually done is I've actually put up the ETF versions. So as you can see here, I've got the SPY down on down below on my chart. This is from NinjaTrader, and as you can also see, I've also got our quantum trading indicators. I've got in fact, I've got the 30-minute chart, I've got the 3-minute and the 1-minute, and above that I've also got the SPY. I've moved it to the 30-minute. I did have the weekly chart, which we'll also go and have a look at. The 30-minute chart for the SPY. I've got the QQQ, which is obviously the NASDAQ, and I've got the DIA, which is the Dow Jones, because as you know, the markets went up today. They went up quite strongly on Jay Powell's, very soothing words. I mean, basically, it can be summarized as, yes, we've got to raise interest rates because of inflation. We've got to tackle the inflation problem. There will be an interest rate hike when the Fed meets later on this month, but don't worry, it's not going to be too drastic. We are going to, keep a watch on it. Just generally kind of soothes the market. And of course, we have what's going on in the background, the terrible, tragic situation in Ukraine. That's fed into oil prices. Oil has gone up to over $100. I think it's closed at $110 today. Where's it going to go next? Well, the next major stopping point is but anywhere up to $140, which I think the last time we saw that was some considerable time ago. And of course, with oil prices going up, energy costs going up because of sanctions that have been, imposed on Russia. That also feeds into inflation. So I'm not really sure how the Fed and other central banks are going to manage, trying to keep the market sweet, as it were, while at the same time bringing down inflation and bringing down the cost of living for us all. The focus of the market has been very much on oil, and rightly so, because the charts have been very, very dramatic. But there is also what's also been going up quite strongly is agricultural product. Wheat has gone up strongly. Corn has gone up strongly. Now, the reason wheat has gone up is because where the conflict is at the moment in Ukraine has always been known as what's called the breadbasket of Europe. And between Ukraine and Russia, they actually produce, I think, almost 30% of the global output for wheat. Most of it, the vast majority of it, goes to developing countries. There are already problems with supply. Egypt, places like Egypt, I think, there's the wheat prices, the cost of bread is going up. And when we have inflation, that affecting basic foodstuffs and people can't afford to eat, you will get a lot of social unrest. So not only do we have the situation in Ukraine, people obviously losing their lives, there are so many implications. What Russia has done has unlocked this Pandora's box of horrible things, which unfortunately we are going to have to face further down the line. Now, back to the markets, they seem to be quite happy at the moment. And you know, maybe you may think that's, you know, that's a little bit odd, as it were, but it's a classic sort of cynical move by the market makers, because if we look at the charts in more detail and we apply the principles of volume price analysis, we know that, in all honesty, you know, this is not going to last. Now, as a trader, as a day trader, you have to trade what you see on the chart. If you see the chart going up and you see a valid potential entry, you take it. Just be aware that, you know, volatility could come in quite unexpectedly. With volatility, I would suggest you keep your position size very small. You keep your stops very tight, and you know, you just take advantage of that particular move, knowing that it is against this, you know, this landscape where literally anything can happen at a moment's notice. A piece of news will hit the market and the market will suddenly roll over. Now, what is volume price analysis? With I know those of you who come along regularly are either, you know, have either read my book or you have some of our quantum indicators, or I know even some of you are on our Forex program. But what volume price analysis is essentially, it takes the concept of the relationship between the price action and volume, and on the volume side, what it does is, what we're looking for volume to do, we want it to validate what we are seeing with regard to the price action. It's a validation, and when the two are in agreement, we know we are looking at a genuine move. Now, volume, so that's the price action and volume aspect of VPA, but it's also support and resistance. We use candles and candle patterns, and we look at time, and by time I mean we look at multiple time frames. Now, market is actually closed, doesn't matter, because it's really I really want to highlight some important aspects of these charts, as I said, for the SPY, the QQQ, and the DIA, because we also have a little bit of divergence, certainly between what is going on the QQQ, the NASDAQ, and the other two indices. And for that, what I'm actually going to do, I'm actually going to move it to the weekly chart, because this is where you really do get a sense of, as I said, the divergence that we are seeing at the moment. So if I'm just going to quickly move this to the weekly charts very quickly, and let's see what can we see. Right. And what strikes us immediately looking at these three charts, just eyeballing them, you know, across the screen, is where is the price actions sitting? I said earlier that volume price analysis, a hugely important element of it, is support and resistance. How you draw those key levels of support and resistance lines, zones on your chart, is very much up to you. You may draw them manually, you may have a tool, you may have a special indicator. David and I, we have developed price-based support and resistance, and also volume-based support and resistance. And the price-based support and resistance for this platform is what we call the accumulation and distribution indicator. These are these hatched red and blue lines that you can see on the chart here, as I'm showing you with my cursor. And the way this indicator works is essentially when a level is tested and it holds, the line becomes thicker. So we have a strong visual picture of the relative strength and weakness of these different levels that we can see here. What we also have is we have volume-based support and resistance, and these levels are derived from a volume point of control. The volume point of control is the most important area of the chart. It's volume and price over time. It's where a market, an instrument, has been essentially in a congestion. It's been happy to transact within a range. There's been no clear bias or direction, and until there is a breakaway, as we can see here, which happened last October for for the SPY. What tends to happen, not tends to happen, what happens is when there is a break, there's always an increase in volume until, as we can see here, the volume starts to die away, and the price action actually hit became a resistance level, not a very strong resistance level, but enough to, put a halt to that particular move higher. Then you normally get a congestion phase, and you then get a reversal. Now, on this occasion, the congestion phase at this level wasn't sufficiently long enough to move the volume point of control itself up here, as it were. It actually stayed anchored to where it was, as I said, back in October last year. What then happens with the volume point of control, it then becomes a very strong region of either support or resistance. And this, as I said, is the weekly chart. And what we have here is, this is last week's price action. This big wick to the bottom of this candle is the price action. If you recall, on Friday, there was the equities, the indices, these ETFs, they all stormed back. There was, they ended up dramatically higher than the previous day on the Thursday. So the week closed out with this candle with a very deep wick to the bottom of the candle. That's telling us there is buying coming in. What we then have to compare it to, we have to go and have a look and see, well, how is that volume? It's a very, very wide-ranging candle with a very deep wick, and we look at the volume underneath it and you think, okay, to me, it doesn't look consistent with, if you like, the strength of that move that came in. I mean, it went, I think overall, I think it was up 800 points or something like that. And you say, well, how can you judge that? Well, when we look at a similar hammer candle, okay, it's not quite as it's not quite as deep as this one here, but look at the volume underneath it. It's I wouldn't say it's almost double. So that is kind of anomalous of itself, and that is kind of anomalous itself. Plus, what the price action actually managed to do was simply drive it back to the volume point of control. Now, this is the price action so far this week, and we can see here it actually started lower, and it's, we've had some buying coming in, and again we're back at the volume point of control on this particular chart. So that's the SPY. If we look at the DIA, i.e. the Dow Jones, we have a very similar picture. If we take last week's candle, again, a very deep wick to the bottom of that candle. If you were just a price action trader, that of itself would tell you that, there has definitely been buying beneath that candle. It has to be, because the candle on the week was a down candle, but by the end of the week, the price action had been driven higher. So there must be buying under there. Without volume to try and give you some kind of validation of whether that is genuine or not, that's all you would know. And I'm not trying to say that traders who just use price action, they don't know what they're doing. The system doesn't work. I'm not saying that at all. All I would say is that if you add volume to it, it just gives you that extra dimension to what is actually going on with the price action. And once again, what we have here is we have not a lot of volume for really the range, what I'm saying, the range of that candle, which makes this move at the very least suspicious. When we look at this candle and we see the amount of volume that went under there, it's not a terribly wide candle, so that is also anomalous. So we have kind of two anomalies, different types of anomalies. That is enough that should be enough to raise a red flag. Now, there are enough red flags at the moment because, given what is going on, and we certainly can't ignore what's going on, but the chart itself is almost as if, the traders are kind of being sucked in. The market is saying, yeah, we kind of know, inflation, there is inflation, there's this horrible situation going on, but we're still quite confident things are going to get better in the future. Let's hope they are. But for it's longer term, medium term and longer term, the markets are not looking particularly strong. Does that mean they're all going to reverse tomorrow? No, it doesn't. Because, as I said, you have to look at the picture from two very different perspectives. If you're a trader, you have to be aware of this on a day-to-day basis, and that prices may swing quite quite wildly. There might be some whipsawing, as 1 minute it'll be up, 1 minute it'll be down. If you are confident with that kind of volatility, then fine, you use your volume price analysis methodology and you trade both sides of the market. I think if you were an investor and you were thinking, well, I can see markets are holding up, maybe it's a great time to get in. This is not financial advice. I would say be very careful, be aware that what you see in terms of simply the price action is not necessarily being validated at the moment by the volume. And what's also even more significant with the DIA is when we talk about support and resistance, we have the resistance coming up ahead. It hasn't actually got to the volume point of control yet. And above that, we have a very, very strong level of resistance. And we know that is a very strong level of resistance. Why? Because it is a very thick line. So yes, it could get to the volume point of control, but it's got an awful lot, an awful lot of effort is going to be needed to get through there. And it's going to need an awful lot more of volume down here to actually shift it through here and back towards its all-time high, which it might get. It very well may get to, despite everything that is going on at the moment. As I said, aside from the conflict that we're seeing in Ukraine and Russia, but the consequences of that conflict in terms of the feeding into further inflation coming not just from energy, the energy sector, but also basic foodstuffs, as it were. So that's what the Dow or the DIA is doing. Then when we look at the Qs, which is the NASDAQ, and we have a totally different picture. What do we see? We see the price action above the volume point of control. It's almost as if the market is saying, tech and the NASDAQ has suffered very badly, the technology sector, and badly from the inflation narrative, because tech stocks tend to be growth stocks, so they take on more debt because they want to grow. And as soon as there is the specter of inflation, and inflation is a lot of things, but it's also the cost of money, so servicing their debts is going to cost them more. That's why they sell off. The money is pulled out and it's rotated into safe havens such as bonds or what are called value stocks. But what do we see here on the Qs? On the NASDAQ, we see a totally different picture. We see, first of all, we are above the volume point of control. This is last week's candle. We see a very similar picture in terms of the volume profile and the price action profile. They're all very similar in terms of their candles and the volume, but it's where that price action is in terms of the support and resistance. You're using the volume point of control as the fulcrum for the chart, as it were, and this is telling another story. What support and resistance tells us, it gives us, it adds another dimension to the narrative. Now, what I've done, what we had before, I had the 30-minute chart for each of these instruments, and I thought the 30-minute chart was absolutely brilliant because, first of all, we have the session breaks, and particularly today, where we've had, as I said, they've gone up strongly in response to Jay Powell, and it's almost all I want you to have a look at, focus on, is I want you to focus on what this price action is doing and what the volume is doing. And even if you know nothing about VPA and the relationship between price action and volume, this move where you have rising prices and falling volume should immediately raise a red flag, because you know something's not right, and that's what VPA does for you. It tells you something's not right. What we're also seeing is we have this sort of this arching, this curving over of prices. Now, this is just the 30-minute chart. This, this was going higher, as I said, as once Powell had, has coming towards the end of his testimony. It did actually roll over slightly. We had some selling coming in here under these two little candles. They've got wicks to the tops of their candles. Then we had a sort of effort to rise again. A little bit of volume came in under there. I think that's fairly consistent with the range of the candle. And then the last candle of the session, it's got a deep wick and a smallish body, but look at the volume that's come underneath it. Now, it would be very interesting to see. Obviously, this is a physical market, so it's closed. So we would have to go and look at maybe what the futures, what Globex is saying, because what happens is when this market opens, there is a catch up with what's been going on in the 24-hour market. But this amount of volume coming in underneath this candle, where you've got a wick to the top, it will be interesting what happens tomorrow. But I just want to draw your attention to this type of we call it catenary type price action. Again, we've got the volume point of control, very nice strong platform from this from the accumulation and distribution indicator. This is blue hatch line, so there's a very strong platform. So even if it does roll over, well, where's it going to go to? I mentioned we have the obviously accumulation and distribution is price based. I also use our own Camarilla pivot levels. These levels on the 30-minute chart will actually be refreshed tomorrow, because they're only in play on a daily basis. If we also have weekly levels, they appear on the hourly chart moving up to the day chart. So we can't really take those into account because they're going to change tomorrow. But the obvious point where it could potentially come all the way down to is back to the volume point of control and the accumulation and distribution level here, which was first it was resistance and now it is support, and it's very strong because you have these two working in tandem. So that was the SPY. And if we look at the Qs on the 30-minute chart, again, very quickly, let's have a look. I'm just going to have to put some more data into NinjaTrader. Is a great platform. It tries to keep the amount of data coming through to a minimum, as it were, but with the charts, once you get to the 30-minute and the 60-minute, you just got to add a few more days, otherwise you get this very, very odd looking chart. And if we look again to what we're seeing on the Qs, you see this going higher, and we see the volume going lower. We also have candles with wicks to the tops of the candle. They're always weak candles. And the final candle of the day, yep, we've had some we have some selling coming in, not quite as dramatic as we've seen on the SPY. And once again, where is this going to go down to? We have this strong level here, and we've also got the volume point of control on the 30-minute chart. The volume point of control is not obviously at the same point on all the time frames. It will vary. It is calculated based on the time frame in question. So you would use the slower time frame. That would give you a wider perspective, if you like. And also bear in mind that when the price action on maybe on the chart that you're trading is a faster time frame, it can coincide with a level, an important level that is on a slower time frame. That makes it even stronger, because the slower time frame support and resistance, either from price based or volume based, they're even stronger. So you're going to have more volume to actually push the price through, either if it's going up or it's going down. And the 30-minute chart is a really nice chart to apply the concepts of VPA, and you simply just look at the candles and look at the volume underneath it. Is the price action being validated by the price action? As I said, it's and I'm not going to cover candles and candle patterns, but I will do in future sessions, looking at 2-bar reversals, looking at doji candles, looking at we've looked at hammers, looking at shooting stars. The candles, the wicks of the candles are hugely important, especially when you read the candle together with the volume that is being displayed underneath the price action. And we can simply move over here. We can see, well, what was going on here. We had a nice move higher. We had a wick to the bottom of that candle, but the volume was falling, and it stopped. We had a down candle, but the down candle, it was quite a wide down candle, but there wasn't enough volume. So you could say that yeah, that was moving higher. That was a pullback, a correction, not a reversal. Why wasn't it a reversal? Because the volume was insufficient. Because just as we look at volume, we can understand the concept of volume going up as the price is going up. If the price is falling, we also need volume to rise. And if we look to the previous day here, we've got a really nice example where the price was falling and the volume was rising. And that's what we want to see, because it takes just as much effort in terms of volume for a price to go up and then to go down. And it carried on. It did sort of carry on high. Not massive volume. You have quite wide ranging candles, but it worked. It was sufficient to push this price, as I said, up to well, I wouldn't say quite to this resistance level here, but enough to end the day as a very positive day. So that's the Qs. Let's have a look at what the version of the Dow was doing. Let's go on the 30-minute as well. I just want to show you. Let's put the days in as well. Let's put 100 days in very quickly. And again, a very similar picture. And what's interesting here with the DIA, the Dow, is we had a very similar pattern here. We have this sort of curling over of price. Price is rising, but you can see it's really sort of having an effort to move higher. there's really not a lot of volume underneath it, and we've had a very similar pattern. You have this sort of curving over. The volume is falling, price is still rising. You know, then this is a very interesting candle, because suddenly you have slightly wider spread than, say, this one, but very close to this one, and you have this kind of sudden sort of bit of an inrush of volume, but it's still anomalous. It's still anomalous. And how do we know it's anomalous? Because what we do is we say, okay, let's have a look at that volume stick here. Let's go and find a volume stick which is pretty much the same, and you look at a candle underneath and you think, oh, okay, well, it took this much volume to move it that far, but come over here, there was almost the same amount of volume, and look what's happened, particularly as it was precipitated by this sort of gradual falling away of volume as the price climbed higher. There are occasions when markets, you know, they will climb on low volume. You mustn't run away with the idea that, you know, that, oh, well, it never, you know, it always rolls over. It's just a red flag, and you think, it's for you to pay close attention to. So that is definitely the anomaly. And if you were long at this point, okay, you could see that, but the price is still going higher. Yeah, the spreads are narrowing. You've got wicks to the bottom. It's really struggling. When you see this one, then you think, then I think something is going to happen. And in fact, it does. You've got two candles there rolling over, reasonable amount of volume. Again, you've got another effort to rise here. You've got this spread candle. Look at the volume underneath it, not very much. And then it's actually closed the day on a reasonable amount of down volume. So this is what's going on in terms of VPA on the 30-minute charts. But do bear in mind what is going on. Let's go back to the weekly charts for these three indices, ETFs, 3 indexes, because there is a divergence. There's a divergence in as much that the market is very positive towards the Nasdaq, because it is above its volume point of control. On the SPY, it's the same on the ES, and it's also the same on the S&P. It is at the volume point of control, so it could go through. We'll have to wait and see. And certainly on the Dow, it's a little bit further away. So markets, as I said, given what's happening in the background, then they seem to be reacting in a very counterintuitive way. So what we have to do is just pay attention to what the VIX is doing. And even here, given all that is going on, it's a little bit odd in the sense that, yes, it has spiked higher. In fact, this is the VIX that I have on my Forex platform. Would you believe it? The broker I use actually provides it's a version of the VIX, but it tracks the VIX itself. If you don't have it on your platform, you can certainly get you can certainly see the chart at investing.com, which is a fantastic free resource site. And as I said, given what's going on, the market reaction to, as I said, the Ukraine and the inflation narrative has actually been fairly muted. I'm not sure how long that's going to stay. So this is what I'm saying. The charts are saying that all is not right in terms of price action and volume, as we've seen on those 3 ETFs, and even the VIX is not. There's something not, as I said, there is something not right, and for the simple reason it's too low for what is going on, and that tells us it's complacency. There is fear, but in not as much as you would expect given what is going on. And we only have to look over here. This is the pandemic. This is the big sell-off in February of 2020, and we can see here, what did we spike to? We spiked up to the 80s. We're down in the 30s. And I appreciate, obviously, at the time, But what have we had so far? We have the conflict, we've had the threat of nuclear warfare, and in some ways you think, well, you know, what's it going to take? Is just the threat not enough? I mean, please God, it is no more than a threat, and the threat goes away. It's just the markets are what they are at the moment. There is volatility, but it's not as extreme as we would expect, and I would expect at this particular time. But that doesn't mean to say that volatility isn't going to arrive, you know, fairly soon. And we will see that. We will see that primarily in the VIX, and obviously with dramatic price action in the indices and the ETFs and in equities themselves. That's what I'm going to say on this particular topic for this particular session. I'm going to do a few more of these at around this time, just as a kind of catch up. I'm going to also focus on other parts of the market, in particular the bond market, because although I said, you know, volatility isn't as elevated as we would expect, it's actually very elevated in the bond market. But I didn't want to confuse it with what I wanted to say today, and I really wanted to highlight what I was seeing, what is going on in terms of volume price analysis. As I said, in these particular time frames, the 30-minute chart is a really nice chart to see these patterns, to see these anomalies, you know, to see how the price action and volume work in tandem to give you a validation as to what is actually happening and what is, more importantly, what is likely to happen. So thank you so much for coming along. Before I disappear, very quickly, let's take that away. If you want to catch up on what my analysis, if you can head over to my website, which is annacooling.com. I'm also keeping my two Forex pages up to date. One is a Forex one. Now, we haven't looked at the Forex market because the Forex market is also telling us, feeding into the narrative, telling us a story with regard to the individual currencies that are either being bought or sold, but I'd rather keep that for in another session. And I have my personal page, which is Anna Cooling, and I write on there, and I put links that traders and investors may find interesting, to help us through these difficult and unique times, as it were. And there's certainly and I will certainly be updating what is happening on oil. The indicators that I've used on the chart, they are the ones that David and I have developed for our own trading, and you can find them here on this site at quantumtrading.com. They're available for MT45, NinjaTrader, TradingView, and TradeStation. The indicators on NinjaTrader, they all vary very slightly. The accumulation and distribution indicator is in that variant is only available for NinjaTrader, TradingView, and TradeStation. The one on MT45 works in a slightly different way. The code that they provide for MT45, it doesn't permit us to give us that thickening of the line, which is a great shame, because as I said, you do get the most amazing instant visual picture of whether an area, a level, is it strong or is it weak? And the thicker that line, the stronger it is, and the more volume you're going to have to need to actually move through. What I haven't included, what I also want to cover in a future session, I want to actually look at Bitcoin, because Bitcoin is absolutely fascinating at the moment, with all that is happening, and obviously gold as well. But I don't want to do too much in these sessions. I just want to pick out different topics, make the sessions slightly shorter, and then you can catch up with the recordings, which will be up on YouTube either later today or certainly by tomorrow. So thank you so much for coming along and joining me. I hope you enjoyed this session. I hope you learned something. If you've got any questions, you can either drop me a line at anna@annacooling.com, or you can leave a comment at the bottom of the recording. So take care, stay safe, and I will catch up with you next time.